When we talk about the most successful investors of our time, Bill Ackman's name is always in the mix. Clearly, he's not an average Joe. As the founder and CEO of Pershing Square Capital, his leadership has delivered over 2,000% in return since its inception 20 years ago. But how did he do it? What's the secret behind his fortune? Hi everyone, I'm Petar Petrov, Senior Analyst at TradingKey. In this video, we will unpack the key principles behind Ackman's unique investment style and how everyday investors like you and I can benefit from that. Before we begin, remember to tap the like button and let's get into it. Ackman is quintessential value investor. Just like Buffett, Ackman looks for companies with durable business moats that are undervalued by the market. His time horizon is long, evidently since he has held companies like Hilton and Chipotle for nearly a decade. Fun fact, over the years, Ackman's performance has mirrored Buffett's in many ways. But make no mistake, Ackman isn't just copying Buffett. He brings a louder and opinionated spin to value investing, and this starts with activism. While traditional value investors might take a passive stake and wait, Ackman takes action. His style is known as an activist investing, by buying significant stake in a company and then pushing for changes to unlock hidden value. This can range from replacing the management, restructuring operations, to even launching a new product. And if management resists, Ackman is not afraid to rally other shareholders to apply pressure. To Ackman, activism isn't about instigating drama, it's about catalyzing change that can benefit both the business and the shareholders. Ackman believes in maintaining a high conviction approach, of course, on deep research and long-term belief. Pershing Square typically holds just 10 to 15 stocks, and the top 3 often makes up nearly half of the entire portfolio. Stay tuned till the end of this video to find out exactly what are they. Ackman doesn't believe in spreading himself thin, but rather on concentrated bets where the odds are in his favor. In his words, most investors over-diversify because they're lazy. They haven't done enough research into any of their companies. Ultimately, Ackman is no stranger to unpopular opinions. In 2002, he shorted MBIA, an issuer with a pristine credit rating. At this time, no one believed him. What they didn't know was MBIA's massive risk exposure. The amount of debt they had insured is much smaller than the cash they hold. Undeniably, digging deep into the company's balance sheet paid off for Ackman. Fast forward to 2008, when the financial crisis hit, MBIA collapsed, and Ackman walked away with over $1 billion money. Being contrarian means you're often early, sometimes wrong, and usually misunderstood. But Ackman is willing to look wrong in the short term, especially if it means that he's gonna be right in the end. Now that we have explored Ackman's 4 core principles, let's bring in Mario, our senior equity analyst, to walk us through some of his biggest positions today.
Thanks, Peter. Hey everyone, I'm Mario. Let's take a closer look at 3 of Ackman's standout holdings: Universal Music Group, Chipotle, and Uber. And will they tell us about his bold investment style? Hey, don't forget to smash the like button. First up, Universal Music Group. Ackman might or might not be jamming to music in his office, but he's definitely vibing with UMG's business mode. Ackman sees UMG as the undisputed leader in global music. With artists like Taylor Swift and Drake, UMG dominates streaming revenues and owns massive copyright libraries. With its own steady cash flow and global and digital music consumption, it's no wonder why Pershing Square holds such a large stake. Next, Chipotle. This is a masterclass in Ackman's activist investing. Back in 2016, after a food safety crisis, Ackman took a 10% stake in Chipotle and demanded change. He pushed for manual innovations, drive-thrus, and global expansion, and this resulted in a 6-fold increase in the stock price, from $9 to $55. Chipotle became the blueprint for Ackman's activism logic: find a great company even if it's down and help it shine. Soon enough, the stock will follow. And finally, Uber. Here's where Ackman's contrarian genius kicks in. After the hype around Tesla robotaxi shook the market, Uber stock dipped it. But Ackman remains unfazed. He doubled down on his belief that Uber wouldn't be wiped out by autonomous driving, but rather benefit from it. Why? His bet was on Uber's future, not just as a taxi app, but as a foundational infrastructure platform for mobility. Its network effect in ride-sharing and delivery is a fortress, and it is poised to integrate self-driving tech, not be displaced by it. Even if it makes him look wrong in the short term, when Ackman commits, he goes all in. So, what can we learn from him? Dig deep to understand businesses, stay confident in your convictions, and more often than not, do not let market noise shake you. Want to invest like Ackman? Check out Star Investors on TradingKey.com and get access to full portfolio breakdowns, detailed sectors allocations, 13 affiliates from more than 100 top investors, all in one place. That's it for today. Please be sure to like the video, subscribe to our channel, and comment below if you prefer Bill Ackman or Warren Buffett's investment style. Remember to stay informed, and I will catch you in the next one. Bye bye.